I'm Katie Janos-Small from Euroweek. This is the 9th Annual Islamic Finance Summit, and joining me now is Deutsche Bank's Dr. Hussein Hassan to discuss fixed income Sharia compliant products. Dr. Hassan, welcome. Hussein, how do you see international Sukuk issuances from the Middle East trending this year in terms of volume levels?
I think issuance levels will be slightly lower or at best at par compared to last year for a number of reasons. I think the evidence so far this year on the ground is that there's been only one international Sukuk issued out of the region. This was Dar Arkan Sukuk, which although it did relatively well, I think gave an indication of how challenging it was to attract international investors in this current market, where international investors are more concerned with managing whatever risks they may have arising from the Eurozone problems with Greece, etc. So that's one aspect of it. I think the second aspect is to do with the risk averseness that international investors have because of the way they perceive themselves as having been treated relatively less fairly compared to local investors in relation, for example, to the Saad and Al-Husaybi case. The international investors feel that local lenders were given preferential treatment. And it's therefore, going to be a lot more difficult, I think, to convince some of these international investors to actually, consider investing in the region. In general, I think issuance levels for 2010 will be lower or at best at par with 2009.
How do you see spreads on Sukuk trending this year? Do you think that Sukuk and conventional spreads will trend more or less in line?
No, I don't think there will be any arbitrage in spread levels between conventional bonds and Sukuk. At the end of the day, investors are, the investor base is pretty similar by and large, and the way in which they will evaluate the credit and the risk is pretty much the same. So there will not be a difference in spread levels merely because one is a Sharia compliant instrument and the other is not. There may be differences in spread levels arising out of other concerns, but not merely because of the Sharia compliance of one. Yeah.
What's the appetite of the Islamic investor base towards dollar-denominated Sukuk issues?
The appetite for dollar-denominated Sukuk issues is there. The issue, of course, is that there is more preference for locally denominated or local currency-denominated Sukuk because that's where the local banks are more liquid. Right. Most of the liquidity is in local currency. Most of them are retail banks, so that's where a lot of the liquidity is coming from. And although there is a peg, obviously, between most local currencies and the dollar, and therefore investing in dollar-denominated Sukuk shouldn't be really a problem, there's still, I think, some lingering, concerns, about potentials for depegging or repegging. So there's definitely a preference for more locally denominated Sukuk issuances compared to international ones. I think the more significant preference, though, is for local issuers compared to international issuers. So, whether local issuers were issuing in local or international currencies, local banks would definitely have a preference for local issuers. And there are a number of reasons for that. There are regulatory, concerns. I think the regulators have been very clear that they want banks to focus on lending to local corporates, local borrowers, and there are therefore a number of approvals that may be needed, to participate in issues that are offshore issuances, or where lending is actually going outside. It's not entirely surprising either that that local banks would have a preference for local issuers. There are also, I think, a number of external pressures, given the amount of infrastructure development that's expected, and therefore the funding that's going to be required in this region. It's in the regulator's interest to ensure that the local banks can support the infrastructure development rather than supporting infrastructure development elsewhere. So there's definitely a preference for local issuers. And whether that's going to be in local currency or in dollars, it's less of an issue, although there's definitely a preference for local currency, given that's where the liquidity is.
And Hussein, there's a lot of refinancing coming up in the Gulf and the Middle East generally this year and next year. How much of that is going to be met by Sukuk issuance?
A lot of that will be met by fixed income issuances, whether international or local. And we've already seen some of the activity that we've seen at the beginning of the year. The reasons for raising, or issuing those Sukuk or those instruments was to refinance other instruments that were maturing. That's going to be a theme. And if we look at, the amount of refinancing that's going to be happening, or the maturities of the instruments that we know about, there's clearly a lot of refinancing that will happen. My expectation is a lot of this refinancing will be done locally, for obvious reasons, and to the extent that the local market isn't able, I think, to satisfy the refinancing requirements, then there will be access to international markets, not necessarily in a capital markets format, but perhaps much more structured in nature. Yeah.
And finally, Hussein, what's your biggest concern for the market in the coming years?
My biggest concern is that there's still a lot of infrastructural development that needs to happen in terms of legal and regulatory infrastructure in order for the market really to take off. For example, the growth really should come from Saudi Arabia. Saudi Arabia is, from every which way you look at it, and the most important economic player in the region. Unfortunately, issuance levels in Saudi Arabia have been low and will probably continue to be low for a number of reasons. One, it's very difficult to get clean legal opinions because of the nature of the Saudi legal system, the fact that there isn't binding precedent, the whole concept of binding precedent doesn't exist, so judges are not bound by the decisions of previous judges, etc. So, it's difficult to get clean legal opinions, one. Secondly, it's difficult to get clean tax or zakah opinions, right? Because the zakah laws are very, very old, and it's not clear how a number of scenarios would be treated under those laws. And thirdly, Sukuk depend on a number of internationally accepted structures, in order for them to work. They depend on the concept of trust, for example. The trust concept is not recognized in Saudi Arabia. They depend on the issuance being done by an SPV. There are no laws in relation to SPVs in Saudi Arabia. So the way in which, for example, this particular issue is an obstacle, if you want to issue in Saudi Arabia using an SPV, you would have to set up a proper company and you would have to capitalize it fully. And one of the main rules in Saudi Arabia in relation to capitalization of companies is that a company must be capitalized to the amount of its debt, of its outstanding debt. So if you want to issue $1 billion Sukuk, or 1 billion Riyal Sukuk, the company's capital must be 1 billion Riyal. It's not it's not easy. If you had 1 billion Riyal to start with, why would you need to do a Sukuk? And if you needed to issue another billion, you had to capitalize it with another billion. I mean, so it's difficult to see why you actually would even go to issue a Sukuk if you had the capital to start with. So there are a number, I think, of obstacles that are infrastructural in nature that need to be resolved in order for the market really to take off. But the market should take off. The amount of financing that needs to be raised in order for all this infrastructure to be developed is huge, and there is absolutely no way that the local banking community can satisfy or can meet this demand.
Dr. Hussein Hassan, thanks very much for joining us.